The US presidential elections are just around the corner, and it pits the current president Donald Trump against the presidential hopeful Joe Biden. Set against the backdrop of this pandemic, which has affected polling, the US presidential elections are shaping up to be an unprecedented one. So what does the US elections mean for the stock market? And how these elections might or might not affect your stock portfolio? First, we'll take a look at a poll to see who has the upper hand in this presidential election so far. According to the national polls conducted by the BBC, as of the 14th of October 2020, Joe Biden from the Democrat Party is leading President Donald Trump of the Republican Party of 52% to 42%. So according to the polls, Joe Biden is the frontrunner in the presidential election so far. And if things stay the same till the election day, then the US will have a new president come the 3rd of November 2020. But the incumbent president, Donald Trump, is not going to go without a fight. One of the things that Donald Trump is quick to highlight to his followers is how the stock markets have performed under his presidency, specifically how well the stock market has performed under him. These are some tweets that President Trump has tweeted about the stock market. Back in 2018, Donald Trump mentioned how the stock market was up by about 40% since he was elected. And in 2019, he pointed out in anticipation of the 2020 presidential election that if anyone but him became president, there will be a market crash which will affect the stock market. And in another 2019 tweet, Donald Trump also pointed out that since he was elected, the Dow Jones is up by about 43% and the Nasdaq up by about 50%. These are just some tweets that the President of the United States have mentioned about the stock market and how he has contributed to its growth. So let's take a look at how Donald Trump has fared against previous presidents in terms of stock market performance. The first president that we'll take a look at is Ronald Reagan. The R in the brackets indicate the party which the president is from. So Ronald Reagan is from the Republican Party. And the stock market made a 118% return during his terms as president. The next former president that we'll be taking a look at is George H.W. Bush, or George Bush Sr. So George Bush Sr. is also from the Republican Party, and the stock market made a 51% gain during his tenure as president. The next president that we have is Bill Clinton, who is from the Democrat Party. Under Bill Clinton, the stock market made a whopping 210% gain during his term as president. The next president is George W. Bush, or George Bush Jr., who is also from the Republican Party. During his 2 terms as president, the stock market declined by 40%. So the stock market performed quite badly under George Bush Jr. But then again, during his years as president, he had to face major events such as the September 11 attacks and the 2008 Great Recession. The next president that we'll be taking a look at is the previous president, who is Barack Obama from the Democrat Party. Under his 2 terms as president, the stock market made a 182% gain. And for the current president, Donald Trump, the stock market has so far gained about 54%. While the stock market has made quite a decent gain under his presidency, Donald Trump's stock market performance is not the best of the lot. However, to be fair, Trump's stock market performance is only for 1 term of his presidency because he is not yet elected to be in the 2nd term. However, for other presidents such as Barack Obama, his stock market performance of positive 182% is spread out over a longer period of time because he was elected in both terms of his presidency. Let's take a look at how President Trump fared against the 2 previous presidents in terms of stock market performance at the same stage of their presidency. This is a chart by Macro Trends which shows the stock market performance by president. And if we compare President Trump to the 2 previous presidents, Barack Obama and George W. Bush, we'll see that currently President Trump is in the 45th month of his presidency. At this 45th month, under President Trump, the stock market has gained 41.9%. This is higher than George W. Bush's stock market performance of negative 7.9%. However, it is lower than Barack Obama's stock market performance of 63.7%. So there is some truth in President Donald Trump's tweets about the stock market and how it has performed under his presidency. However, that said, his immediate predecessor, Obama, performed better than Trump did in the stock market at the same stage in their presidency. Another tweet that Trump tweeted about the stock market is that he mentioned that the stock market is likely to take a beating if Americans voted for Joe Biden instead of him. Again, let's take a look at historical data to see whether that is true. This is a chart showing how the stock market has performed during presidential election years throughout history, and data was collected all the way back from 1928 to currently. The data show that historically, the stock market tends to average a 9.3% gain when a new president is elected, versus a 13.4% gain when the incumbent president wins. So based on these historical averages and data, there is some weight behind the argument that if a new president is elected during the 2020 presidential elections, the stock market might perform worse compared to if President Trump is re-elected. However, this does not necessarily indicate that President Trump is more capable than Joe Biden. One of the main reasons why the stock market tends to perform better under an incumbent president compared to a new president is because the stock market doesn't like uncertainties, and there tend to be greater uncertainties in the markets when a new president is elected. And that is one of the reasons why the stock market tends to underperform when a new president is elected. But there will be definitely an impact on the stock market based on which party wins this election. The Republican Party and the Democrat Party both have different agendas and policies, and these policies are likely to affect the performance of the stock market. Now let's take a look at the policies that these individual parties have aligned themselves with. For the Democrats, a victory in the presidential election will likely see them push for more generous government spending, especially in terms of stimulus spending. We will also likely see an increase in corporate taxes and greater commitment to green initiatives. On the other hand, if the Republican Party wins, the victory would likely see a further potential corporate tax cut from 21% to 20%. Corporate and income taxes are likely to remain low, and there will also be generally a greater deregulation for businesses. Based on this quick overview of the potential policies that these individual parties are likely to implement if they win, it is easy to assume that a Republican victory would mean better stock market performance because of their low corporate taxes policies. But based on past data, we see that for the previous presidents, the presidents from the Democrat Party perform relatively better than their counterparts from the Republican Party. What this means for us as investors in the stock market is this. There are many factors which affect the performance of the stock market during presidential election years. There is no one or two factors such as which party the president is from that can have an outsized impact on the stock market. This data by Charles Schwab shows how the stock market has performed historically on average. Right now we are in the 4th year of Donald Trump's presidency, and based on this data, the stock market averaged a gain of 13.7%. And as of this filming of this video, the S&P 500 has made a gain of about 8.4% year to date. So again, based on historical data, we are currently below the average, which means that there is potential upside for the stock market moving on from here. However, past performance does not indicate future performance. So if you are investing in the stock market, make sure you do your own due diligence before investing. For the next part of the video, you are surely interested in the US 2020 presidential election. You might be eager to find out who is likely to win the presidential election. Will it be Donald Trump or will it be Joe Biden? I'd like to share with you who I believe is likely to win the presidential election this year. I have no political leanings to either party or either candidate. I'd just like to share with you my analysis of the stock market and who it indicates is likely to win the presidential elections. The stock market tends to be quite a good indicator of who is likely to win the presidential elections. So in the event of a Democrat victory, we will likely see more government spending in the form of higher stimulus spending, and this higher stimulus spending is likely to result in a broader-based economic recovery. Up till recently, the recovery in the stock market was fueled by the tech stocks. But in the last couple of weeks, we are seeing other sectors in the stock market picking up, and this indicates that the economic recovery is more broad-based, rather than solely on the tech sector. This is an overview of how the different sectors are performing in the stock market in the past 3 months. And if you take a look at the maps, it's not just the tech sectors which has been performing, but sectors such as the consumer cyclicals and industrials are also doing well. The second thing that we are likely to see with a Democrat victory is a greater commitment to greener initiatives. This is the price chart for the solar ETF with a ticker symbol of TAN. And you can see that year to date, the solar ETF has recorded gains of about 135%. And also in the most recent weeks, the solar ETF has gained some strong bullish momentum. So based on these signs, the stock market is leaning towards a Democrat victory or towards Joe Biden. Hopefully you guys have liked and learned something from this video. If you did, make sure you subscribe to this channel so that you don't miss out on future videos such as this on the stock market. To your financial success.